Good morning. This is Tom Alexander. It is Monday, September 4th. It is Labor Day in the US, a holiday. So there is some funky Globex trading, but for the most part, the cash markets are closed. And we are on the cusp of a new week. It's 9:31 in beautiful Charleston, South Carolina today. I hope all of you that live in the US are enjoying your long weekend. Few comments about the markets before we dive into the charts. It's pretty clear, and I'm going to show this. There's a lot of guessing by both camps of analysis. You have fundamental analysis, and then you have the technical analysts. And the difference between what both of those camps do and what I do, and what I encourage people to do, and what some people do, is I look at price action. I look at price action to help me analyze markets and also determine good reward to risk situations. And it's not just prices moving up and down or looking at a bar chart. It's specifically viewing price action through the lens of auction market principles. Auction market principles basically outline how markets develop and why they develop that way. It's very logical. It's very consistent. It's really immutable and irrefutable, and it can be extremely powerful in your trading and in your analysis. The auction market principles are in effect in all degrees of time all the time. So it applies as much in a granular time frame like the intraday time frame as it does on the monthly time frame. And then when you can put all those time frames, line those up, then you have a really great reward to risk situation. So those of you that may be new to my work, you may be new to auction market principles. That's what this is all about. If you are looking for market profile, the market profile graph was developed specifically to show how an auction market develops. Nothing more, nothing less. The market profile graph can be a very helpful tool in determining market condition through this lens of auction market principles. But it's like everything else in trading, it's not magic. There is no magic in trading. Unfortunately, that's what 99% of the trading educators and gurus want you to believe, that it's magic. Even the fundamental analysts, there's a lot of magic involved in that. And the reality of what happens is what the buyers and the sellers do. That's irrefutable. And at times that can give you a probabilistic look into what might happen next, what is most likely to happen next. Okay, let's take a look at the charts. All right, I'm going to start with the weekly charts. This is the S&P cash. And the thing to note here, you can write reams about what is happening, what should have happened, what shouldn't happen. But what is happening is the market is making higher highs and higher lows all the way up. Higher lows, higher highs, all the way up into here. Now, is this little pullback here just the latest and greatest high or low? Looks like it. It has to be given the benefit of the doubt, at least in this intermediate to long-term time frame. Now, there could be some good trades in this area. There are a number of possibilities about what could be going on here. One of those is that we're building a balance area. In other words, this is your low extreme, this is your upper extreme, and we're going to trade in this range for a while. There's no way to know whether or not that's going to happen. But what we can know from this view, if you look, this level is very important. We came down, tested this low last, Wednesday? And we've traded higher. So that's the weekly view of the SPX. Let's look at, here's the Russell. Now, the Russell is really interesting to the upside. This 2006 level, 2007 level is an area that has been tested 3 times. The Russell has not been able to get through it. But again, What is the Russell doing? It's making higher highs and higher lows. Now, it's not quite as dynamic to the upside as are the other three, but you can't deny it's been making higher highs and higher lows since this low. Okay, let's go. We'll do the NDX last. Okay, here is the Dow. And again, what's this market doing? Well, it's making higher highs and higher lows. That's irrefutable. You can't argue with that. Now, if something is going to develop, something substantial is going to develop to the downside, last week's lows have to come out in all four of the indices. That's as simple as it gets. And then last but not least is the index that has led this market. And it's just, we've been on a torrid ramp higher since the low in October, making higher highs and higher lows. So now we know where we are. From an intermediate to long-term perspective, the trend is up. We are in bull trends of varying strengths in all four of the indices. And from there, we can go down in time frame now. Now that we know what the long-term to intermediate term trend is, we can take a look, a more granular look, beginning at the daily charts. Now, just because the long-term trend, the intermediate to long-term trend is up, doesn't mean we can't make money on the short side. But it's good to know what the long to intermediate term trend is, because that's the path of least resistance in that time frame, and nothing substantial is going to develop to the downside unless that trend, that intermediate to long-term trend, changes. And the objective thing that changes that long-term trend, intermediate to long-term trend, is if all four of the U.S. primary, the primary U.S. trading indices take out last week's lows, close below that low. Now, okay, so here we are, the daily charts. I have outlined this in the weekend update that you can get. Go to alexandertrading.com, click on weekend update. You can also, if you're subscribing to my newsletter, it's free. If you're not getting that, go to Tom, or send me an email, tom@alexandertrading.com. I'll put you on the list. You'll get my free stuff, including this. Okay, so the market, basically, we're going to look at all four of the cash indices, but basically it's last week's low and last week's high. That is the immediate short-term tell. That was the Dow. Here's the Russell. Now you can see the Russell has a little bit different pattern than the Dow. Has basically been straight up here, which is a positive thing for the market. It's the broadest index. Let's look at the SPX. The SPX is bumping up against, this is Friday's high. There's a gap here, but above that gap, it's the recent rally high. And then the NDX, last but not least, very similar pattern as you would expect as the SPX, because they're all driven by those 7 stocks, the AI stocks, Magnificent Seven as some are calling them. Okay, if we look at the internals of the market, and when I say internals, I use NYSE data, specifically advancing declining issues, and you can see the 10-day moving average, the 5-day moving average of advancing issues is off of a mildly, and I dislike to use this term, mildly oversold level. And that has been alleviated. You can see that breadth has been very positive for the past 6, 7, 8 trading days. We had one blip to the downside here before we ramped higher into Friday's high, and then brief reversal. So as we head into the week, the rally off of the 25th is getting a little bit extended, but we really have gone net nowhere now since Wednesday's close. So we could be, this could just be a pause that refreshes, and we're going to ramp higher into the early part of next week. One last thing I will mention, we are in a seasonally negative time of year. This is one of the most consistent seasonal patterns and accurate seasonal patterns. this September, October weakness. You can't trade that. You can be aware of it. Always use price to confirm stuff like that, confirm any narrative that you may or may not have. If the market is going up, it's going up. And that's the way it is. Hope you guys enjoy the rest of your weekend. If you have found value in this, please like it. Please subscribe. I'll speak with you again soon.